My name is Helen. I'm a European investment partner at Pantheon. I've been at Pantheon now for 19 years, and I'm the co-lead manager for Pantheon International, which is our FTSE 250 quoted investment trust. So Pantheon International is a FTSE 250 quoted investment trust which concentrates on private equity investments. Private equity typically is investments in private companies in niche sectors which are not usually available to public markets. The objective is to achieve capital growth over the long term, and in fact Pantheon International has achieved 12% net per annum after fees, net asset value growth over the last 36 years, that's per annum. Private equity managers work with those private companies to increase their value over the long term, and typical holding periods are between 3 and 5 years. So those companies are usually in growth sectors, and we have a number of interesting growth sectors in the portfolio, and the private equity managers really help the companies to increase the value by being very operationally focused over that period of time. So people think that it's very difficult to access private equity unless you're a very large institutional investor, but in fact our structure enables really any investor, large or small, to invest in private equity through our publicly quoted investment trust. So Pantheon International invests by partnering with some of the very best private equity managers from around the world. Pantheon International either invests directly into those companies where the investments are sourced by the private equity managers, or it invests into the funds that are raised by those private equity managers. Having access to the private equity investment opportunities is absolutely critical. And because Pantheon has been investing for over 40 years, we've got access to these managers. And by having a very large investment team, we've got 137 investment professionals stationed in offices all around the world, we get access to these investment opportunities. So over half of Pantheon International's portfolio is invested directly into companies. This means that we use a double quality filter to select those investment opportunities. First of all, we're always investing alongside one of our best private equity managers, so the investment opportunity has already gone through their quality filter and actually through our quality filter by having chosen the manager, and then we conduct additional due diligence on the particular company. So in effect, there's a double quality filter that every investment opportunity has to go through. So the vast majority of the companies that Pantheon International invests in are very well established companies that still have opportunities for growth. More than 70% of our portfolio is actually invested in buyout opportunities, which means that the private equity managers have full control over the underlying businesses. We invest in a range of sectors, but our two biggest industrial sectors are actually information technology and healthcare. Now, both of these sectors are being propelled by long-term secular trends. Information technology because of digitalization and automation, which is creating a lot of opportunities. Healthcare because of aging demographics and the need for better healthcare products and services around the world. So essentially, we're investing in sectors which are seeing very big tailwinds and where there's a lot of growth to be had. And then the private equity managers can really capitalize on the growth of those sectors, make sure that the companies are also taking advantage of any operational value add that can be had, and then generally the companies are sold to strategic or corporate buyers. So just to give you a few examples of the types of companies that we invest in information technology, we're invested in quite a lot of software as a service businesses, so SaaS businesses. Examples of those would be human resources software, payroll software, cybersecurity. So essentially must-have products and services that small businesses can't run without. In healthcare, I mentioned products and services. So for example, on the services side, we're invested in chains of eye clinics in the US that deal with cataract surgery, again, something that unfortunately you can't put off, but also diagnostic services. So for example, radiology clinics in the United States. But there's a full range of other types of healthcare products and services. Another area that we find very attractive, given the long-term trends, is sustainability. And there we're not investing in infrastructure, so it's not in renewables and things like that, but it's more about the picks and shovels, which help to make businesses more sustainable or that can enable them to participate in the circular economy. So good examples there would be companies that produce filtering systems to cut down pollutants, either water pollutants or air pollutants, or companies, for example, that help with making fishing more sustainable. So it's really the picks and shovels, the products that can help provide more sustainable products and services to a wide range of consumers and businesses. So ESG is a core part of our investment process. So it forms an essential part of our due diligence pre-investment, but also it's an essential part of our monitoring process. And we actually believe that fundamentally companies that have better ESG standards are actually more valuable companies and would be more attractive to purchasers when they come to exit. History has shown that private equity can outperform public equities in the good times. And actually this outperformance can be even more pronounced in more difficult periods, such as the one that we're living through at the moment. And that's because private equity is really the most active form of ownership. These managers control their businesses and they're able to take advantage of market dislocation and disruption to create more opportunities actually for those underlying businesses. And in fact, that disruption and dislocation can actually create new investment opportunities that the private equity managers are able to take advantage of. So as a direct result of the way that we've constructed the portfolio and the way that we've curated the types of investments that go into that portfolio, we've got a very well-diversified portfolio and a portfolio where 94% of our direct company investments are profitable. Now, if we look at the other side of the coin from a risk perspective, over the last 10 years, our loss ratio has been only 2%. And in fact, even if we took it back 15 years, through the last financial crisis, our loss ratio is just 2.7%. So it's a steady, well-diversified, growth-orientated portfolio, which has been really managed in terms of downside protection.